And Shana Sissel, founder and president of Banrian Capital Management. Shana, so good to have you here on the show. Thanks for joining us.
Thanks for having me.
So the market mostly shrugging off this slower than expected read on retail sales for June. But I was taking a look at your notes, and you're seeing some concerning cracks in the economy. Where are you seeing those cracks, and how does this retail sales report play into that narrative?
Well, I think a couple of ways. The first one that stands out to me the most is we saw in April one of the largest jumps in credit usage and consumer default rates that we've seen in quite some time, which was illustrating that more and more people were using debt to finance any sort of purchasing that they were doing. So that only lasts so long. And so it's not surprising to see that we've seen a slowdown in retail, but there was some indication that this was going to happen. The forecasts for back to school season are largely not that strong. And so it shouldn't be a surprise that this is happening. And I think the market is reacting the way it is because the overall economic conditions are better. And inflation in particular has really started to come down. Now, that takes a little bit of time before the underlying consumer will start to feel that and feel more comfortable. But I think that's kind of what's happening here.
Are you confident that this is a consumer who can continue to prop up this economy?
There have been many times I have questioned that, and they have proven me wrong. If there's nothing about American culture, it's we like to spend money. But there is a limit to what the consumer can take on. They've kind of run through all the excess cash from the stimulus payments during the pandemic. They've started to run up their credit cards. And I think as we start to see an increase in layoffs and starting to see some softness in the employment markets, I think it is completely reasonable to think that consumers will struggle going forward. And that's not necessarily a good thing for the overall economy.
So given the economic uncertainty and how far this market has already run, what's your take on where stocks are headed from here? Are you more likely to be a buyer or a seller of stocks at this point?
I'm more likely to hold and do neither. But what I will say is this, I'm not overly bullish. But I've been wrong pretty much this whole time. I thought a recession would have come in this first or second quarter of 2023. Now I'm thinking it's probably going to be early 2024. But you cannot slow inflation without slowing growth. They're one and the same. So it's inevitable that we'll see a slowdown in the economy. I am feeling more and more that it'll be likely that it will be a bit more of a soft landing. And it's not because I think the Fed did this excellent job. I just think when you have that much excess in the system, pulling it out takes a long time and you have a big cushion to work with in case you make a mistake. So I think overall, I'm not a buyer or a seller of stocks. I'm kind of holding my positions as they stand. And then maybe, if anything, being more of a buyer on weakness when we do start to see that pullback that I have been expecting for some time.
Okay, so I have a whole list of names that you like in terms of individual stocks. So I see Southern Copper, GXO Logistics, Caterpillar, Cigna, Mastech. Are these companies that you're not comfortable then buying at current levels? These are some of the names that you're holding at this point?
Yes. So all of these names have one thing in common. They're all names that do better in a environment where there's less liquidity. So that's the focus. That's the one common denominator of all the names that you just mentioned on my list is that when liquidity is taken out of the system and growth slows down, these are stocks that should do well. Something like Mastech, which is an infrastructure construction company that's done much better than its peers. Its first quarter earnings were quite strong. It's done some very smart accretive acquisitions. It's doing some work in the 5G area. And that is a company that's trading at a discount. If you think about where the U.S. and the world is going to have to be spending money. And when we go into recessionary environments or slowing growth, governments tend to spend more than consumers. And so they tend to spend on things like infrastructure projects. So Mastech would be a beneficiary of that. Something like Cigna, again, healthcare and this type of healthcare, where we're talking about, health insurance management organizations, prescription benefits, things of that nature are needed in any type of environment. demographic trends aren't going to change because the economy slows down. So something like Cigna stands out, trading very, very deep discount to its peers into the market. So again, another name that kind of benefits from less liquidity, and that will do just fine as growth starts to slow down.
And Shana, outside of stocks, where are you turning to mitigate risk and possibly seek returns?
Well, anybody who's ever seen me on here or any other platform knows that I am a big believer in using alternative investments as a way to mitigate risk. And liquid alternatives are available to anybody. So names like MRSK, which is the TASE Managed Risk Blueprint ETF, which gives you quite a bit of market upside, but very good downside protection. That is a fund that we're using, BTAL, which is a volatile fund, but because it is long, low vol and short, high vol, it will do well in an environment where growth starts to slow down and low vol is rewarded. So things of that nature, FMF, which is a managed futures product, all of those things are the types of things that we are allocating to manage risk.
All right, we have to leave it there, but appreciate those picks. Shana Sissel, Bannerine Capital Management, thanks so much.
Thank you.
Good to see you. Plenty more to come on Trading 360 in our 360 Spotlight.